Let's talk stock splits. In the first quarter of this year, Nvidia, which is the third most valuable company after Apple and Microsoft, announced a 10-for-1 stock split. What does this actually mean? Are they taking away your shares? Are they giving you more for free? Hi, this is Olivia. In this video, I'm going to talk about stock splits, what it actually means, why companies use them, and how it's going to affect you as an investor. Stock split, in simple terms, is when a company increases the number of shares it has by splitting each of its shares into multiple parts. So for you as an investor, the number of shares you have with that company is going to increase. However, the total value of your investment will remain the same. Does this make sense? Work with me. Imagine you walk into a restaurant and you got a full pizza pie with no slices, but you can't eat it that way. Then you ask the server to slice it up into 8 different parts. At the end of the day, you have 8 slices of pizza, but that will still give you the same satisfaction you would have gotten as the original unsliced pizza. The only difference here is in the slicing. So that is the same thing we experience or we see when a company does an 8-to-1 stock split. It still has the same value, but then split into 8 parts. So if the original pizza was worth $80, at the end of the day, the sliced pizza will still be worth $80, but then each slice of that pizza will be worth $10. That is an 8-to-1 stock split. In a situation where a company does a 2-to-1 stock split and you have 10 shares with that company, priced at $50 per share, the total worth of your investment is $500. But after a 2-to-1 stock split, the number of shares you would have would be 20 shares because your shares would have been increased by a multiple of 2. However, the total worth of your investment will still be $500. So at the end of the day, you are not really losing or gaining anything from these stock splits. But the next question is, why do companies go ahead to implement these stock splits? What do they benefit from it? The first main reason why companies undergo stock splits is to make its shares more affordable in the market for retail investors like you and I by reducing its market price but still retaining the total value of the company in the market. So in the case of Nvidia, for example, before its 10-to-1 stock split, the value of one share of Nvidia was $1,125. I don't know about you, but I would not have been able to afford one share of Nvidia without going against my own desired asset allocation. But then after the 10-to-1 stock split, the market price of Nvidia's shares fell to $112. That price I can afford without going against my own asset allocation. So the essence of this whole stock split is just to make it affordable for retail investors. Another reason why companies usually undergo this stock split is to increase the liquidity of its shares in the market. That is the ability of these shares to trade more easily and frequently in the market. So because after a stock split, they now have more shares in the market and at even lower prices, these shares will tend to be more liquid. And we know that liquidity is very good for any asset that is worth investing because it's going to attract more investors, which will then lead to higher demands and then possibly lead to higher prices of those shares in the future. My own personal opinion on stock splits is that stock splits are becoming more irrelevant by the day because we now have electronic platforms that sell fractional portions of shares. So let's say, for example, you cannot afford a unit of a share that sells for $1,000. You can still buy parts of it for, say, $100, $50, even as low as $1, depending on the platform or on how much you're willing to invest. So basically, the issue of making the shares more affordable or even liquidity is already taken care of. However, from a psychological perspective, one can still argue that affordability still plays a key role in making investment decisions, and to a large extent, it can also help you gauge or predict the level of confidence management has in the future growth of the company. We've come to the end of this video. Now you know what a stock split is, why companies do it, and how it affects you as an investor. I've also shared in the description some of the trading platforms where you can buy fractional values of shares. And if you found this video helpful, hit the like button, subscribe for more investing tips, and share your thoughts with me in the comment section. Thank you and see you in my next video.